Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, April 10th, and we got a few items here to note, and we're just going to jump right on into it. We're going to start off here with the NFIB Small Business Sentiment. This is basically where a group of small businesses kind of basically voicing where their thoughts where the economy is going, how they're feeling and stuff. So it's kind of important to see what their outlook is, where the economy is going. So back in February, it was 94.3, and it dropped a little bit for March. So they didn't have it as a positive outlook as they were feeling in February for where the economy is going. Next item to note is the wholesale trade for February. Again, these aren't market mover numbers; they're just kind of numbers out there to kind of gauge. But for January, we had a 0.6 increase for trade. And for February, it jumped up to 0.9. So we had a little bit more trade activity in the month of February. And then job openings for February, we had back in January we had 3.5 million, and basically it's remained the same, 3.5 million for February for job openings. Next item to note, we'll jump over to headline news. And the stock market's down quite a bit, and right now it's playing a cue from Europe, where a lot of European stocks have been dragged down because of the Spain and Italy. Their stocks were bringing the rest of the market down, and as a result, also the Spain Italian bond yields are rising, so their costs are going up. They're just under 6% right now on the yields, so 7% is where we have to have the caution. But still, things that they're getting a little jittery about over there. So let's take a look at the bond market, see what interest rates are doing. The bond market's still taking still kind of enjoying a nice little rally here. We're up about another 18 basis points. We're almost knocking on the door at the 104 level, which we haven't seen for quite some time here. So actually we're at one of the best levels we've seen for quite some time here on this level. So if you're out there and you got some you got your rate floating, I would kind of take cash in now and lock in, because I don't think this is going to last too long. As we can see, we had these opening gaps here, and at some point these will close at some point, so it will at least come down at some point. Later in the week we will have some information like the more inflationary numbers coming in towards the end of the week, so we do have to be a little cautious, as for inflation, it is the bond market's worst enemy. So they could, if we have a higher inflationary number, it could come in very negative for the bond market. All right, folks, you guys have a wonderful day, and we will see you tomorrow. And you guys have a wonderful day again. And stop by Mike's DailyMarketReport.com and subscribe to get your free email daily updates.